It is.
Oh my God! Now you got to speak. Of course you have to talk. I thought you were getting off. You just can't do it. You got FOMO. You got a bad case of FOMO.
It's Wednesday and it's 7 o'clock. Actually, it's 6:56. It's a little early, and it's chasing gazillions, not the same as making millions. Wednesdays with Fernando and Anthony here. Although I'm not going to be on the show tonight because Fernando's got a guest and I'm out. And you know what? Know you all out there, man. Fernando does this all the time from wherever he is, but it's so loud where I'm at. So I'm gonna jump off. I'm gonna let Fernando take over the show this week. Please chime in on the chat. Thumbs up. Give us good ratings. All right, guys. Take care. Bye.
All right. Bye-bye.
Take care, Anthony.
All right. Okay. How do I shut mine off?
I don't know. I don't know how to do it.
Hold on. I don't know.
Just hit leave.
Just leave?
Yeah.
I don't want to end the stream, though.
Can't you just hit leave?
I don't know. Hold on. I should be able to just leave.
Yeah.
No, that wasn't it. You have a little dot above yours. Oh, there I am. Okay, now.
Yeah.
Okay,
Right. Bye-bye.
Bye.
Bye-bye. All right.
All right.
All right. Can you see me all right, Joe?
Yeah.
Okay. All right. So Anthony's got date night today, so he couldn't make it. So I brought in one of my close friends, known him since 1985, one of my original college roommates.
Resume worthy
at this point, yes.
Just barely.
40 years. A lot of history here, but someone that I trust. I would trust him with my money, which I don't trust too many people at all, but with my money. And he is in tune with what's going on in the banking world, private equity, what's going on with Silicon Valley Bank. And I wanted to bring him on to talk about how it affects everyone, including commercial real estate. So, Joe, if you could first introduce yourself, tell us a little bit about who you are. I mean, I know who you are, but the audience doesn't. That'd be great.
Yeah. Yep. Well, thanks, first of all, Fernando. This is a lot of fun. I'm Joe Esparraguera, Joseph Esparraguera. Been a CFO for 20 plus years, 25 years. Controller before that, kind of came up in the CPA world. Most of my career has been with companies under 100 million, but 100 million in revenue, but came up through the venture capital world, doing a lot of venture capital backed entities. I was a customer at two businesses of Silicon Valley Bank, so I'm very familiar with how they do business and how different they are than other banks. Did a bunch of companies backed by private equity, some privately held companies, most of which I help sell. It's kind of my specialty. And then just been doing the CFO thing today. I'm the CFO for a international IT consulting firm called Resolvit, about 250 consultants worldwide, Latin America, and India. We do not do business with Silicon Valley Bank, but it definitely affected us in some ways, and I can explain that later on.
Okay. Terrific. All right. So I've lined up a couple questions. Obviously, when this happened, me and you were sitting down for a blacktop. Mm-hmm. You went very in-depth into it. I was not in a great state of mind to hear it that night. So I was a little bit on the mean side, which I felt bad about, worse than anyone else the next day.
You don't need to.
But okay. I thought it was interesting that you knew so much about it, but I know it has you very concerned. Yep. You're always concerned about the national welfare.
I'm a warrior. I'm a worrier.
And what's going to happen to this country's economy? You're always worried about the economy and how how everything affects us.
Yep.
So here's the first question: SVP, Signature Bank, both failed, right?
Mm-hmm.
Why?
Okay, so those two banks are different. I'll tell you why SVB failed in simple terms, and we can get more complicated if you want.
No, simple's good.
So banks, simple banking, banks take in deposits. The deposits to a bank are a liability because they have to be given back if you want the money back or if you want to write a check. The bank takes the money and loans money if it can. And hopefully it makes a profit on the difference between the interest that it loans out and the interest that it pays you. And usually that difference is very big. But there's always some portion of money that they keep behind and invest in some way that is not through a loan, especially if the lending market is soft. If there's not a lot of demand, not a lot of good credit out there that they can loan to, they're going to invest their extra cash in usually U.S. Treasuries. Now, the U.S. Treasury bonds and bills are the safest investment in the world. It's what the whole world goes to when other investments have turned to crap. And it's what every portfolio has in it to some extent of any major investor in the world. They have some U.S. Treasury. The full faith and credit of the United States has never been in question. Could be in question someday, but right now it's never been. So what happened was SVB basically is taking in $200 billion in deposits. It's loaning about $140 billion in loans to venture capital. SVB, Silicon Valley Bank's main thing is venture capital backed companies. That's what I was when I was a customer of theirs. I was CFO of a venture backed company. And believe it or not, the loans were never the problem. What happened is they had an extra 30, 35, 40 billion dollars, which they invested in T-bills and T-bonds, everywhere from 2-year to 10-year. The problem was they did a lot of 10-year bonds. And while it's a very safe investment if you hold it to maturity, the interest is going to come in. It is like any bond, subject to changes in interest rates. When interest rates go up, the value of a bond goes down. And the longer the maturity of the bond, the more that variation will occur. So SVB is holding these bonds.
Is Signature Bank in the same spot, by the way?
Different situation. Signature Bank.
Okay. No, go ahead and finish SVP. And
then we'll SVB was SVB. The bonds. So the problem is they had bought these bonds, let's say at $1 billion. Just pretend a small part of it at $1 billion. Well, they kept them on their books, and they held them in a classification for record keeping called assets held to maturity, ATM. ATM assets under U.S. accounting principles do not have to be marked to market, meaning during the interim statements until they're actually cashed in, they can stay on your books at cost. The problem is the real value of those bonds was way lower than what they had on their books because interest rates. Right. Because interest rates had been skyrocketing since they were buying these bonds in 2019, 2018, 2017, 2020, 2021, when rates were, near zero.
Right.
But now rates have been skyrocketing, the fastest rate climb in history of any government in any country, in any place, an interest rate rise since mid 2022. So now they go to, so what happens is the market gets soft. Venture capital people don't want to invest as much in their, so they want their client, their companies to tap into their lines of credit with SVB. So all of a sudden SVB starts needing cash, both for lines of credit and for just venture capital funds pulling money. They don't want to, they have to spend still, so they just start pulling their money a little bit. Well, SVB now needs cash. They can't sell their loans necessarily. So what they do is they go and cash some small part of those 10-year bonds. Well, the market realized that when they went to sell $10 billion in bonds or thereabouts, it resulted in a $1.5 billion loss. That was never on their books before. Well, these are venture capitalists. They pay attention. The venture capitalist owners of the companies that are clients of SVB realize that.
Or vulture capitalists.
Vulture capitalists, as you like to call them. Yes, vulture capitalists. And you're probably right. Well, when they went in and cashed it, when they went in and sold those securities and had a $1.5 billion loss, it was big enough to wipe out their entire excess capital, all the capital that they required to be had in the bank, meaning they were going to have to raise money in some way. Well, that spooked a lot of venture capitalists. Why? Because your deposit in your bank is guaranteed only up to $250,000 by FDIC.
Right.
$250,000 is a lot. Most people don't have $250,000, but a lot of companies have $250,000, and they have to have $250,000 because they got to pay people.
Right. Payroll. Right.
Right. And so when the VCs started realizing this, they contacted their CFOs and their CEOs, and they started pulling money out of SVB. And the problem was, unlike in the past when you would have a line at the bank telling you there's a bank run, because remember, no bank has enough cash in its vault to pay out all its depositors. It has just a fraction. Usually, to be honest, 10% or less.
Come on.
Oh, yeah, 10% or less.
That vault's not stacked up to the ceiling with cash?
That vault is not stacked to the ceiling with cash.
Animals.
So, but most people were doing this on their phone. It was a week, it was starting to be the weekend. They were doing it on their phone. They were doing it from their PC. You don't need to go line up in a bank. You just start moving money. And when it started rolling, it rolled so fast within hours. SVB had lost 25% of its cash deposits. And it would not have survived. And thank goodness it was a Friday, because then it could shut for the weekend, and the FDIC and the Fed and everybody else came in and developed a rescue package. That's SVB. Signature is a similar situation, but the difference is they didn't deal with venture capital. They dealt with kind of a much more risky. The Signature was much more, from what I understand, I have much less experience with Signature, was much more into the whole crypto world thing, which we all know that's kind of, it's got its highs, it's got its good, it's got its bad, but mostly
I know you're down on it. When I told you I was in crypto, you told me, get the hell out right now. And I didn't, and now I regret it a little bit, but I'm hanging in. Now I'm in.
Now you're in. Yeah.
When it gets to level, I'm out.
Right.
It's way too risky.
I don't know. I don't know enough about crypto to comment. So I do know that I don't understand it.
Yeah, I don't either. Okay. What would you say this is good? How is this affecting the economy? Obviously, that's what everyone wants to know.
I mean, the problem is
two banks.
Right. We're not talking 2008. I mean, you warned me we were in your backyard in 2006, late 2006.
Yeah.
Or early 2007. And you warned me that you saw softness at the high end of the housing market.
In the mortgage banking industry as well. But the loans we were doing were unbelievable. 110% LTVs, people undocumented, buying $400,000 houses with no verifiable income.
Right. And that was crazy. And that's what caused that housing bubble, which led to the disaster of 2008. And you had great insight into it. I wish I had enough money back then to have made something off of it, because you could have shorted the market and, been a gazillionaire,
Right.
using Anthony's words, right?
Right.
A gazillionaire.
That's a real word. Okay. He likes it. He
He
uses
likes
it a
it.
lot. He
He
uses it.
uses it. Yeah.
Yeah.
So we went. But this isn't 2008. The difference here is we're not talking about a bunch of bankers who, were given loans to, giving loans to people unworthy of having loans. We're talking about a bank that bought U.S. Treasuries. In other words, it acted it's not like they acted irresponsibly. They may have acted financially dumb a little bit, but not irresponsibly.
Okay.
And the problem is that situation exists in most every small to regional bank in the country. Every small or regional bank has U.S. Treasuries sitting on its books that are significantly overvalued because they put the moniker on them of held to maturity. But if they start having a bank run, that held to maturity ain't real. They're going to have to go and sell that U.S. Treasury to have cash,
To cover,
and then they're going to hit the losses, same as SVB. So every regional and small bank had that problem.
That's pretty major.
That's why Federal Republic went down. That's why, there's always a couple of other banks that are on the verge of going down.
Yeah. How do you think this affects commercial real estate? Because a lot of these banks obviously do loans. You
Right.
said that that's what they take their money. How do you think this affects commercial? I know, obviously, offices, everyone knows that's being affected with the whole COVID work from home situation. So any other effects you could think this could affect commercial real estate?
I mean, the reality is it could do exactly what the Fed was trying to do in raising rates. It could significantly cool the economy, because these banks, especially the regional and smaller banks, they have had either significant cash running out their door or smaller amounts of cash. Not a whole lot coming back in. There's nobody running to do business with a small regional or a small bank, because that's not yet. They're very important to both the commercial and the residential real estate markets. And so I think those guys are going to tighten up, and the big boys are going to tighten up. The Citibanks, the Chase, the Morgan Stanleys. Those banks are also, well, Morgan Stanley's not in that business, but Chase, those guys are all going to tighten their credit lines up.
Right. Okay. Yeah, and they're going to tighten up their criteria to get a loan.
The criteria to get a loan.
Underwriting is going to get tighter.
Yeah. The underwriting is going to get a lot more,
because they have less money to lend.
Thus, the regionals and small have less money to lend, and they really have to have. A lot of people are watching the quality of what they've got now, of the loans they have, even though the loans didn't cause the loans didn't cause a problem for anybody. It wasn't the loans that were the venture capital loans. One thing that most people don't realize, I bet, and I don't have this statistic, but I know in the loans we had with SVB back in the day, they had a guarantee from the venture capitalists, investors in our business. So meaning it was these VCs swim in money. So they had no reason to fear that the loan would ever go bad.
Okay.
But that's not the case of regular banks. Regional banks and small banks don't do that. They don't get guarantees usually. They may get a personal guarantee, but not from wealthy businesses like venture capitals.
What did the Federal Reserve decide to do today? Did they raise rates again?
Yeah, quarter point today. Quarter point. Which, if it hadn't been for this, they would have raised probably at 50%, 50 bips. But if they had done none, it would have sent a bad signal to the market that they're scared. So 25 was
What
a good number.
what more can the Federal Reserve do to avoid another big bank collapse like this? I mean, obviously SVP is a huge top 15 bank in the country, over $200 billion in
Right.
assets. We don't want too many of those guys going under, obviously.
Right.
So, what is there anything they could do? Or
I
can you
mean,
think of anything? I don't
I mean,
know.
it's a basic look. You had politicians saying stuff like, no bailout and no, no free ride. Well, we're not talking about a free ride for this is again, it's not they're used on language of 2008, but this isn't 2008. This isn't a bunch of mortgage brokers, going out and getting hookers in Las Vegas and having a good time.
Right.
This is
Right.
depositors. These are people who have to make payroll. Not they didn't take a risk. They made a deposit. So the Fed, if they really wanted to calm things, could say all deposit that cap, that 250K cap, and that's what they've effectively done. They've said that's gone. That does not exist. And if you made a
For all
deposit,
banks? For all banks or just the ones that
it's
went
not
under?
an explicit
Tricky.
guarantee, but it's an implicit guarantee. Remember back in the day when before Freddie Mac and Fannie Mae were owned by the federal government?
Quasi
They're
government.
quasi-government. Even though their debt was always considered kind of unofficially backed by the U.S. government. It turned out to be true because when the shit hit the fan, the government did walk in and take over Fannie Mae and Freddie Mac. But that was never a guarantee. I think that same guarantee exists today for every big bank. If you're a small bank, community bank, they may let you go under and your depositors lose money. That's why, but that's exactly for that.
250.
Huh?
Over 250, though.
Over 250. But again, you better be a pretty small business if you don't have 250K at any one time in your bank account.
So is it so you think they'll cover it, but they're not going to put it in writing?
They're not going to put it in writing. But they've de facto.
It's a wink, wink.
It's a wink, wink, just like it used to be with Freddie Mac and Fannie Mae back in the day.
Do you know of any other banks you think might be in trouble here?
No, I'm not. I don't. I mean, I read a lot about the banking situation because I have to worry about it. I mean, I got a call from my CEO when we had that, and who was very concerned about smaller banks, but we didn't. Our money's in Chase. We were always very secure. Chase will never go down. You want to talk about people who have a guarantee? The big banks, the Wall Street big banks, they have a guarantee. Nobody's gonna lose money that deposited money with a big bank, and that's the problem. Is multiply me times 10,000 chief financial officers or controllers in the country, and that's how you get a bank run. Right? You start moving your money out of your small regional bank into your big bank.
So are you saying invest in Chase Bank right now?
Yeah, that would probably be a good stock. Yeah, you wouldn't want to own the regionals because their stocks are really already down.
What do you where are the private equity firms now placing their cash with the big banks?
With
I
the
guess
big banks. Yeah, they're all looking at their companies, and nobody ever cared about how much cash you had concentrated in a bank account at any one time. It used to be, banking shouldn't be like that. Banking, when you're in a company, it should be the last thing, like, will my checks clear? You don't want to think about that as long as you really are generating cash and have the money in the bank.
Right.
That shouldn't be something that's on your mind, but now it is on people's mind. Now it is on how do I have a $500,000 bi-weekly payroll. So that means I got to have at least $1 million in my account at any one time. But $1 million is way over that 250. Can I break it up amongst a number of accounts? Is it per account or per customer? What if I have 5 accounts at Chase, all with $175,000? So they're under the 250. but they're all under my name. And for payroll, they all consolidate. So you have everybody doing these mechanizations right now to try to figure out how they can stay under the 250. And it is very unclear. It is a per account concept, but that means if you're a really big company, you might have 100 accounts. And that's just crazy. That starts getting really hard to manage.
Well, when you say that private equity now is going just to the big banks, well, SVP was a big bank. So
SVB was a big bank. And it was a safe bank. Again, its loans were good. And it had U.S. Treasuries. If you looked at its balance sheet, you would go, shoot, loans, good loans to companies that can generally pay you back, or you have a guarantee, and U.S. Treasuries. Damn, that seems pretty safe. But you had to go that one layer down.
Right.
And
do you go on FDIC and looked at their report, their last filing, I guess?
Yeah. And I've read a lot about their portfolio, and they had an entire mismatch. A deposit to a bank is a short-term liability. That money can go out at any moment. That SVB went out again years ago and bought 10-year treasuries is a mismatch of the liabilities to the assets. You have long-term assets but short-term liabilities. That's not smart. They would have been much better served to buy to use the overnight window, or to buy 2-year or 30-day paper. There's every kind. The U.S. government has every kind of paper there is available, right? It has all kinds of maturities, and it has funds. If it doesn't have the maturity you want, there are funds which can structure it so that the maturity works out the way you want. So you can always construct it, but they constructed it to maximize because generally interest rates on longer term bonds are more than on short term. That's not true today, but they're usually, so they went out and tried to get yield by getting longer term stuff. And that was a problem. It wasn't criminal. Like everybody's talking about criminal stuff. That's not criminal. That's a little stupid, but not criminal.
Okay. One last question. What's the future of the banking industry in terms of brick and mortar, or doing everything digital? You think everything is going
Everything.
start digital?
It'll all be digital, and there's going to be very few banks. I do not see a bright future for your community bank.
Brick and mortar
The brick and
shops are going to
mortar
be
shops, I won't name names, but there's some.
Please don't.
Yeah. There's some. No, and I don't know them. I don't know their balance sheet. I don't know what they do, but I wouldn't want to work at one because I don't see a bright future for them. What their difference used to be was knowing their customer and serving the local business person.
Right.
And that's very powerful, but does it beat the fact that it's very hard that to manage a bank and have the technology that you need when you're small?
You still have to have. I would think every bank still would have to have a branch or two. How about if you want to deposit cash? I mean, how do you deposit cash digitally? It's impossible.
Yeah,
right?
look, I don't say the disappearance of brick and mortar. I mean, if you say brick and mortar and you say, Will Chase and Schwab and Citibank all have a storefront, yeah, I think there'll be small storefronts in lots of places. I don't think that's going away. What I think is going away is you wouldn't want to be in the ATM business because everything's going to be paid for digitally. It already is. You already have that pretty much now, heading that very fast that direction. And And I just wouldn't want to be in a small or regional bank. Those folks are going to have. I think you're going to see a lot of them disappear, not in terms of getting destroyed, but they're going to combine up and try to create much bigger entities.
Oh, right. So they can play with the big boys, you mean?
So they can play with the big boys, and you're going to lose some personal service if you're a local business person who likes to
Yes.
shake hands and schmooze and have a drink and stuff like that. That could get tougher. That's going to get tougher.
I like having a drink.
I like having a drink too. I'll miss the personal stuff, but you can't have safety in an environment like this, or pretty much in any environment in which interest rates are kind of going like that in the banking world. Unless the FDIC says all deposits are guaranteed, which probably would never happen because it's too much. It's trillions of dollars. They can't do it.
Okay. I mean, those are the questions I have. I appreciate you answering them. You want to add anything else that you can think of?
You're going to see commercial real estate. I don't know the direction of commercial real estate. I don't know. I know this. It's going to be tough for the next year. It was probably going to be tough anyway with the possibility of recession. This banking thing has definitely highlighted the risk of a recession. But I don't see, the labor market is as tight as ever. And I don't see, there's fewer and fewer people working. A lot of old people like us, man, they're just leaving the workforce, calling it quits.
Jimmy Moy's thinking about retiring.
Isn't he?
After his 5 years of quiet quitting, he's going to retire. That's fun.
I thought he already was retired.
I'd put him on commission. If I was Rich Piana, I'd put him on commission. Okay, that's me.
Yeah, man, it's going to be crazy. Commercial real estate. I tell you what, there's going to be some commercial real estate that's going to come up for sale. Probably. That could be interesting. But yeah. I don't know. People got to get back. People are going back to offices.
They are. We had a meeting at Hilco this year. This week, State of the Union, State of the Business at Hilco. And they were 5 days in the office kind of guys, right? Everyone in the office. Then COVID hit and they were really lax. Now they're like, all right, we realize the whole thing has changed, but we want you in here 4 days a week minimum.
Right.
You can take one day off, a floater day, work from home. It's fine. But it can't be every Friday either. You can only take 2 Fridays a month from home. Because the CFO walked around, I guess the CEO walked around a couple weeks ago and said there were 3 people out of 40 desks on a Friday afternoon at 2:00. And he was astonished by that number.
Right. That's people taking. Yeah, some people just like to work from. I love working from home. I'm working from home. I work from home all the time, but that's because I don't have a local office. But if I had one, I'd probably only go in 3 days a week anyway.
I've been doing it for 23 years. I don't have a problem with it. You work harder, I think, if you're somewhat motivated.
Yes.
Then going to the office, you have an hour lunch, hour and a half lunch. You go to the water cooler, bullshit for 10 minutes there. You take a break. You take another break. There's a lot of.
You can work when you want to. You can go do some things that you need to do during the day.
No, sometimes I work at night. Right, you work at night sometimes. Where if you leave the office with all your equipment there, you're gone. That's it. You're done.
Yeah, man. Yeah, but I think there'll be some amount of off. Now, the problem for real estate, I think, is the fact that it's not going to. If it's a 40-person company, they don't need space for 40 people. They need space for 25.
Probably for 10, to be honest.
And that could be a problem. That could be a problem for commercial real estate.
Well, you got to repurpose those spaces. That's what's going to happen. They're going to be repurposed. I personally think in the multifamily and the apartments, into that family apartment condo realm, because housing is still a huge need. and you got to be able to repurpose. Now, repurposing a whole building, talking to a couple construction friends of mine, they said is not easy because
No.
they're actually on last Friday at the St. Patrick's Day celebration, Dave Wagner,
Yeah.
Brett's partner at Greenbench,
Yep.
he said apartment buildings and office buildings are built on different loads. So repurposing them would mean gutting out the whole thing because the supports are not the same in an office as they are in an
Oh,
apartment.
wow.
I was like, ooh, that's a problem.
Oh, that's big.
Because that's a huge retrofit, obviously.
That's big.
Yeah.
Big. That's big.
But the zoning is also, most places say, hey, this is zone office, it's office, right? Now there are some cities like Houston that has no zoning. Houston city limits, no zoning. So if you have an office, you want to turn an apartment, have at it. They don't. It's Texas.
It's Texas. Do what you want. Bring a gun.
Yeah.
Bring 7 guns.
Always bring a gun.
Always bring your gun.
I rent one when I go there for the week.
They do it at the airport.
Yeah, you can
do it at the airport. Yeah.
All right. Yeah. Any other?
No. I think this will pass, this banking crisis. I think it showed that regulators were not doing their job. Because it was obvious. Oh yeah, definitely. They don't want to say it. Government people who get TV time don't want to say that they were at fault, but they were definitely at fault on this one. It was very obvious what was happening if people had paid attention. And nobody was paying attention, including the Fed. So I think it'll pass. We're still in the middle of it a little bit, and I think it will pass. And if it passes, we'll learn a lesson. Just like 2008. Hopefully, we'll never repeat 2008. Hopefully, we'll never repeat this problem.
All right. Well, I appreciate you coming on, man. Short notice. Thank you. Anthony had date night tonight, and I wanted to let him go out with his wife for dinner.
Good. I heard him ordering before you got on. We were in the waiting room.
He can eat.
He was ordering. He was asking about, do the ribs come with the cornbread and the mac and cheese, or just the mac and cheese?
Yeah. Oh yeah. And if they don't, he'll order it. He'll be like, yeah. His wife's, I think, paying for dinner.
Yes.
Oh, I've eaten with him. He can eat. He'll eat what's on his plate and what's on your plate.
So can we.
Reminds me of you a little bit. Yes.
Yes, very much.
All right. Thanks, Joe. I appreciate it. Bye-bye.